Hey, this is Warren Redlick, Monday, May 11th, with the AI stocks report update for the week. As you can see, AMD roared. ASML had a great week. Most of the AI stocks went up, and our AI stock report index is up almost 9% from where we started. Palantir had a bad week despite having a good week. We're going to cover all that. We're going to cover some news stories about what's going on with AI. We're going to have a little bit of a deep dive about some Asia news related to AI. We're going to have a shorter mini deep dive into what's going on with Tesla Robotaxi, and we're going to have our first edition of Analyst Watch. We have CEO Watch, Pod Watch, and now Analyst Watch that are part of the AI stocks report. We have some analyst news, so we'll cover that today as well. Just covering our stock buzz, AMD roared 33% up in a week. They had a good quarterly report. The stock went up like crazy. Data center revenue surged 57% year over year, 35% server CPU growth over the next 3 to 5 years. AMD supposedly capturing share in both training and inference workloads. I think that's a little tricky. You're going to see that later in our news stories. Long term reinforces AMD's position as a genuine number two and in some segments number one, according to the buzz. I don't think this is really fair to Nvidia, the 800-pound gorilla, to say that this little monkey over here, which is 1/10 of Nvidia's size, is all of a sudden the clear number two. They think they probably are the clear number two, but number one in segments, not an important ones. Still a great company, still excited to see what's happening with AMD. ASML up 15%, riding the AI lithography wave. Multiple firms raised price targets on the company after the company lifted 2026 guidance on sustained high-end machine demand. There's some margin noise. The structural story is bullish. Everybody needs their lithography machines. There's no answer to what do you do to how do you displace ASML. There's no alternative company to provide the lithography machines that are necessary for the most advanced chips we're seeing. Tesla up 9%. Those of us who are long-term Tesla followers are used to this volatility. Recent commentary highlights accelerating progress on unsupervised robotaxis. We're going to have a little bit of a mini deep dive on that. And Optimus Generation 3, with some analysts like Dan Ives raising targets. I think these are sort of older analyst reports that are still moving the stock, or they're analyst reports earlier in the week. I'm not sure. The long-term bull case is intact. Execution on the AI robotics roadmap remains the key variable investors are watching. No, what we're watching is, when do we start seeing robotaxis deployed at scale? When do they start making Optimus and we start seeing Optimus deployed outside Tesla's internal use? That's when this stuff starts to matter for the financials. That's when it matters. What I'm seeing with Tesla stock falling to 350 and rising to 430 or whatever, this is just the routine volatility that Tesla investors are used to if you're a long-term investor. I haven't seen any news that explains why the stock is up, other than that there's just general optimism or we're past tax season. I don't know. I think the idea that people think people know why it's up, I don't know. SpaceX, there's people saying, well, the SpaceX IPO is coming. So what? What does that have to do with anything? I don't know. Nvidia was up 8.5% on the week, the undisputed AI infrastructure leader. This week's rotation to AMD, Intel, and memory names created a relative lag narrative. Yeah, there's a lag. They're up 8.5% on the week, and people think there's a problem with the stock. The company's executing really well. They've got a great plan. Jensen Huang, the company CEO, is probably the best voice for the positives on what AI is bringing to the world, including massive job creation. Everybody's talking about job losses. Like Jensen's like, what are you talking about? We're creating massive jobs. This is a positive, not a negative. Over a multi-year horizon, NVIDIA's moat and CUDA software and full stack systems remains formidable. I would just say their moat and their ability to scale to produce in high volume. Nobody else can produce in the volume that they produce. It's a huge edge. Company still trades at a meaningful discount to the average Wall Street price target. Palantir is the puzzling story. AMD had a great quarterly earnings report and their stock went up 33%. Palantir had a great quarterly earnings report and their stock is down 5.6%. This is the beauty of markets, my friends. One of its strongest quarters ever, 85% revenue growth, accelerating US commercial AI platform. The stock gave back gains. They outperformed analyst estimates by a lot, and the stock fell. Wall Street remains divided. Bulls see it as the leading enterprise AI deployment platform with sticky government commercial relations. Bears worry about the sustainability of the multiple. There's some talk about how Anthropic and OpenAI are starting to infringe. They're starting to develop some of the same business models that Palantir has, and they'll compete. I don't know. I've never really understood Palantir's growth story in the first place, but they're growing. They're executing. They're doing really well. Alex Karp seems to be a brilliant CEO. You have the founder CEO, which is a huge edge. I don't see where the problems are. I don't understand it. Other than this, just markets are fickle. Markets do crazy things. In broader AI news, the White House is considering pre-deployment safety review. We saw this with Anthropic. They had this new model called Mythos, and they didn't release it right away, and they brought it to the White House and they brought it to the corporate world and says, "Hey, we've uncovered this ability to hack a lot of your systems. So let's give you guys access to this first, so you can clean up your systems before you get hacked with our software." Some of us think that was overblown a little bit. Like they didn't really have the inference compute available to have the model used at scale anyway. So is this really progress, or is this really a PR stunt by Anthropic? I'm not sure. We've already covered this, but Anthropic got full access to SpaceX's Colossus One data center. SpaceX XAI has a data center 300 megawatts. I talked about this in a previous video. I think this is a big deal for XAI, SpaceX, in all of a sudden having really high margin revenue and demonstrating a business model that will probably help them going into the IPO. I'm going to talk more about this later. This is going to be the subject of a deep dive. AI trade continues to lift Asian stock markets. Since I'm going to talk about it later, I'll cover it there. Goldman Sachs raises Nvidia earnings per share estimate. I'll cover that in Analyst Watch. Tesla scales unsupervised robotaxi testing. We're going to talk about that shortly. And Anthropic launches new AI agents for financial services. This is part of what we're seeing with OpenAI and Anthropic in particular. I think the other frontier models to some extent. They're figuring out how can we use what we're developing to sell it to businesses and grow our businesses. I don't think this is the big nut for these companies. The big nut for these companies is getting programmers to use it. But if they can expand the companies that are using this to grow their coding use and grow their other use, long term, it's not going to hurt. So I think we're going to see more stories like this. Okay, a mini deep dive here on Asian equity markets, particularly Taiwan and South Korea. They've been rallying hard on sustained AI infrastructure enthusiasm. Tech-heavy benchmarks in both countries surged over 4 to 5% in single days, helping push broader Asian indices toward record highs. The key drivers are semiconductor and AI supply chain names that form the physical backbone of the global AI buildout, notably TSMC, which is a Taiwan-based company that has the fabs that make the chips that Nvidia sells and all these other companies sell. SK Hynix, which makes memory. Samsung, which makes memory and chips. They have a fab in America that Elon is working with to build the AI5 chip. Tesla is also building the AI5 chip on a TSMC fab, but Samsung is in that game. Samsung is a much larger company that does a lot of other stuff, but and that's why they're not a top tier for me. They're not in my primary tier because they do so many other things, but they're significant. This rally has helped erase earlier losses tied to geopolitical tensions, including shipping concerns in the Middle East, and reflects investors rotating back into the AI hardware trade. What makes this story interesting and worth covering is the divergence it reveals. Pure AI infrastructure plays are winning. Companies directly tied to advanced chips, memory, and foundry capacity like TSMC, SK Hynix, and Samsung are seeing strong capital inflows. Reinforces the multi-year structural demand for AI compute that we've been tracking. Broader Chinese tech is lagging. The large Chinese internet names, Tencent, Alibaba, have not participated as strongly. Analysts note this is because their businesses remain heavily exposed to e-commerce, domestic consumption, price competition, areas that are not direct beneficiaries of the AI capex supercycle in the same way. This is, like I've said, my focus is what are the companies that are really focused on AI? So Samsung, which is they're including in this story, Samsung is not in my primary tier because Samsung is still too exposed to domestic, regular electronics consumption. They're not a full-on AI company. Plates a clear signal the AI buildout is increasingly favoring the hardware and semiconductor supply chain over general tech exposure, especially in Asia. It also shows that geopolitical tensions, US China frictions, export controls, the Iran war have not derailed the underlying investment thesis. Capital is still flowing aggressively into the companies, actually enabling AI scale. Another mini deep dive here on Tesla. Tesla has expanded its unsupervised robotaxi operations in Austin, Texas. Multiple reports from early May 2026 confirm they are running unsupervised rides, including at night in the city. Tesla is actively scaling the fleet in Austin and using its end-to-end AI approach, vision and neural nets, no LiDAR, detailed maps, as a key differentiator versus Waymo's more traditional approach. I don't know if there is a traditional approach. There's no traditional approach to self-driving. There's real momentum and discussion around significant fleet growth in Austin over the coming weeks and months. The specific claim, this is I work on these news stories with Grok to figure out what's going on. And then sometimes I'm like, wait a minute, is that really true? So it's kind of answering me here. The specific claim of growing to over 300 vehicles by the end of June comes from community trackers and analyst investor speculation, not an official Tesla announcement. Tesla has been deliberately vague on exact timelines in recent earnings calls. While expansion is happening, calling it concrete progress towards commercial robotaxi deployment is fair, but slightly optimistic, still in advanced testing, early ramp phase rather than a full paid commercial service in multiple cities. So my take on this is, look, Tesla is growing, the robotaxi system is growing, we're seeing progress. I don't know what it's going to take for them to really unlock it. We have seen them putting cybercabs on trucks and sending them somewhere. Where are they sending them? What's the point of having a cybercab if you're not going to use it as a robotaxi? There's no steering wheel. You're not selling it to a customer. What's going on here? So, are they sandbagging? Are they really planning to start rolling out robotaxi at higher scale quicker with cybercab? At some point, are we? This is one of my big things: is when do we see cybercabs in any volume doing unsupervised rides? I think that's coming. I think that's coming. It's May now. I did a poll on X, and people said I think the winning poll result was before the end of June, and like 75% said before the end of September. So when we start seeing cybercabs in the fleet actively taking rides, that's another positive sign. For me, the threshold is, when do they have 10,000 robo taxis working 8 hours a day? When they have 10,000 unsupervised robo taxis working 8 hours a day, that's a level where they probably have to put it in the financials. Once it's in the financials, you see the revenue line, you see the cost of goods sold line, you get a sense of what the gross profit is in this business, and you can see where it's going. That's when the stock really starts to take off. But happy to see the stock up a little bit. This is our analyst watch. One of the features I'm adding to the AI stocks report production that I'm doing here. Goldman Sachs raised its Nvidia earnings per share estimates ahead of the May 20 earnings report. So it's May 11th. In about 9 days, Nvidia is going to report earnings. May 21, we're going to see the stock react. Goldman Sachs cited strong supply demand dynamics across the AI chip market. The firm highlighted robust hyperscaler spending. Hyperscaler spending means when Microsoft and Amazon and Meta and Google and Amazon Web Services are spending more money on growing their data centers. That means they're going to use more chips, and only Nvidia is capable of supplying chips at the scale they need. I think Jason Calacanis predicted $1 trillion in capex spending this year. Not all of that'll be on chips, but maybe a quarter of it, and that's a huge amount of money. And Nvidia is the only one who can scale up to deliver the volume that they need. The others will scale up, but Nvidia is the bulk. Nvidia is the 800-pound gorilla. Analysts emphasize that custom ASICs for competitors are not, which is Broadcom primarily, are not seen as an existential threat, but rather as complementary to Nvidia's GPU dominance. Yeah, I mean, look, Nvidia's the 800-pound gorilla. Everybody else is one-tenth their size. So if somebody else gets 50% growth, great. If the market grows 50%, you didn't take any share from Nvidia at all. If you double and the market grows 60%, then Nvidia grew damn close to 60% anyway. The update reinforces Nvidia's position as the foundational infrastructure provider for the multi-year AI build-out. I think there's more than one foundational infrastructure provider: ASML, TSMC. There's multiple. Zeiss Optics is necessary for the lithography machines. There's a whole bunch of core plays that don't really have competition. With the stock still trading below consensus price targets, the firm views current levels as attractive ahead of what is expected to be another strong quarter. So there's your analyst watch. Goldman Sachs is positive about Nvidia ahead of the earnings report. That's our AI stocks report for Monday, May 11th. Please share this video. Please subscribe to this channel. Check out the channel's homepage on YouTube. I have a new trailer that explains what the idea is behind the AI stocks report and why you should subscribe. And again, please share this with other people. The stocks report has started. We're going to be continuing to grow, but until people start watching more, then it's only going to grow so much. And I hope you find this valuable information that's helping you think about your long-term investing for the future of AI. Also, if you're interested in my long-term options videos, those are available to YouTube channel members, X subscribers, and Patreon supporters. Please can support this channel and you'll get access to my thoughts, my new metric on how do you evaluate these long-term call options, and how does that teach you both about the long-term call option situation and maybe backtrack, and what does it teach you about these stocks. Thank you so much for watching.